Hello, 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 and a massive hello to everybody. How we all doing? 50 pips rocking and rolling here, 3rd of July 2015. So, not making any trade calls or recommendations because you and only you are responsible for the trades you may decide to take. The fact that you're in here means you've read, understood all the disclosure disclaimers here on the website and everywhere else, understanding that we're just performing some live technical analysis in a learning context for educational purposes only. So guys, to say I've thought this out thoroughly would be a blatant lie. Okay, so the plan is it's a slow day. I know some people are going to be on holiday, some people are around, so we're just going to try and do a pay it forwards day and basically stay live and do as much as we can. Okay, the plan is right now we'll start with a full overview, kind of like the weekly outlook kind of video. We'll just go through as many charts as we want to. As long as the chart is on the platform, I'll go through it. Okay, we'll go through it, we'll do a big review. Then I'll probably go off, have a coffee, have a snooze, take some trades, whatever, and we'll wait for some of the data to come out, and then I'll come back up and we'll try and do some updates the whole day, right? So the point is, if you're logged in, because there is going to be a limit to the number of people that can be in the room, you might want to, even if we're not on, you might want to stay logged in just in case you can't get back in. I've actually, it looks like I've secured a bit of a temporary space limit, so more seats. So I hope really nobody should have a problem with finding space in the room. Okay. The other thing which I'm going to do, if you guys remember a while ago on the blog, I asked people to submit any question they may have. You know, any random question about trading, stops, account size, how much I squat, how good my power snatch is, whatever, right? And I'll go through as many of those questions as possible. So again, if you do have questions, just put them in the Q&A box and I'll try and log them in. And what I'll do is, maybe one of the updates, maybe every hour or so we'll do an update. One of the updates we'll just do a burst on Q&A. I'll just try and shoot through and get through as many questions as I can. Okay, so I'll try and keep those maybe not specifically trade related, more conceptual questions. I've got questions on, how many screens you're using, all kinds of stuff like that. So I'll just try and go through those. Okay, so let's get cracking. Let me just double check here. Already some of the comments coming in. I just want to make sure everything's okay. So rock and roll. Audio looks like it's fine. Okay, it looks like everything's good. Okay, so as usual, when we do the let me know if there's an issue with the sound. Okay, what you can see is that basically on the right you can kind of raise your hand, so do a thumbs up kind of thing. So if you just give me a thumbs up if everything's okay. So, and as usual, if there's any chart you want me to look at, just ask me and just put it in the Q&A and I'll get through it. The only thing I would like to ask you is, if you ask a question, I'll get to it, right? We got the whole day, I'll get to it. Don't ask the question more than once, because it just means I've got to get through a lot more entries in the Q&A box. Make sense? Rock and roll, Mal. Good stuff. Okay. So as long as, if you've asked the question, it's there. I'll get to it. Okay. Let's get cracking. So what's going on? What's going on? What's going on? So we had a bit of a quiet week with Greece and all. A lot of event risk in the market, not an awful lot of edge. When the market trades like this, it's not really a market that favors trying to trade with tight stops inside ranges, right? Usually that's a recipe for disaster. Trying to trade breakouts or Momo plays is usually a recipe for disaster. The focus tends to be Thanks, Debbie. The focus is really on trying to play the ranges, right? That's where the edges, if anything. So staying out or trying to play the edges. So for all of you, those wondering what's going on, it is what it is. You know, I've probably had my quietest 2 weeks in a long time in terms of number of trades. That's just the context we're in. That's just the situation we're in. We'll have to deal with it. And no doubt throughout the day, we'll start to speak about that a bit more. So what I'm going to do is I'm just going to go through the charts and talk through what's happened this week, where we are on the charts, etc., etc. Okay, so let's start with euro. What's going on with euro? So we've talked about euro for quite some time, and we've been talking about the fact, you know, for followers on the blog, that we're pretty much stuck in a broader range, and you can call that range 114 40s to 115s, and then that 105 into 104 kind of area, these areas here. And what we said is that unless we get something shockingly a game changer out, unless we get something really important out, like a real change in pace on rates in the US instead of just blah blah blah, right? Or unless we get something real out of Greece, chances are we'll probably stay range bound here, because there's no real reason for the market to really reprice, because, you know, we're fighting on certain assumptions, and unless something changes, it's going to stay inside this area, right? So on the assumption that we're going to stay relatively range bound, what we always prefer to play, or what we understand, that in these ranges the odds are fading the range, not trying to play tight inside the range. That doesn't mean that you can't make money inside the range, okay? As always, people like definitive answers in life in general. Everything depends on the context. But broadly speaking, you know, if you're looking at price moving inside a range, you'll probably have more edge at the extremes. Why? Most likely because that means that you can tend to play with more of an asymmetric risk-reward play, okay? So for example, what that means, if you're looking to short the upside of the range, broadly speaking, with this kind of risk, wherever you want to get short and your target is to the downside, that's your risk and this is your reward, okay? If you're trying to get long the bottom side of the range on a move into low range, pretty much speaking, this is going to be your risk and this is going to be your reward. So basically it means that it's a nicer proposition. You know, it's a nicer proposition. Again, depends on the strategy. Some strategies don't need to have a good risk reward. Really, they can even have a negative one if they win 99% of the time. You know, it really depends. But broadly speaking, you know, assuming even if it's a 50-50, if you have a 1-to-1 or worse, even if it's a coin toss, you're not going to be net profitable on your strategy, right? So that's the extreme. So far, basically, once we've set these extremes, you know, we've had a fairly decent trade here trying to fade the extremes in terms of, you know, this first move back into the highs, sold off very nicely. This second move back into the lows. Of course, the first touches don't count. That's just people putting up some kind of PowerPoint pretending. You know, the first these ranges have to set, then we can start to trade them, right? So basically, that's what's going on in euro, right? So even if we're looking at it in terms of a shorter term, you know, going back into a smaller time frame, you can see that, you know, you've had interesting ways to play this range, right? As we've moved up to the upside, and we've been talking about this an awful lot in the weekly outlooks. We've been talking about this a lot in the room, right? You know, basically what's happening is, you know, all these failures at highs, right? Nice shorting opportunities, failure at high, nice shorting opportunity, failure at highs, nice shorting opportunities, right? So right now the outlook is just, you have to be patient. Unless we get something out of Greece, we just have to be patient. Most likely the bigger players, the bigger money will be looking to fade any rally or buy any dip on Monday, fade an aggressive move, because most likely what's going to happen on Monday, whatever happens, whether it's a yes or whether it's a no, it's not going to be a solution to all the problems, right? The situation is going to stay dire for a long time. There's still a lot of things that have to be agreed. So most likely one would expect some kind of fading opportunity to arise no matter which way the market actually ends up moving on on Monday, okay? Then we can have discussion about fundamentals. Even if this rally's hard, that long term because of QE, etc., we should see pressure on euro. So structurally, from a long-term perspective, euro remains a short. I would not disagree, but you know, we're trying to just look at slightly shorter time frame here, right? And if we go back on the chart, what's happened a bit more recently, because I also want to just give you a feeling of what we've been doing, you know, in the weekly sessions, how we've been trading this. You know, what we said, and we talked about it last week, is going into Friday, because of these structural plays, because of this, you know, the situation, we said, if anything, right, regardless of how euro has been trading, if you want to take a trade last Friday, the risk is really stacked to the short, you know, for short. So if anything, even though they may be wide stops, the risk is stacked so widely that the only thing you can do going into that weekend, last weekend, is get short, right? Okay, so whether you want to or not, that doesn't matter, but it's short. Then what happens? Once we get the gap down, you know, we do not like to sell lows. We do not like to buy highs. We don't like to chase breakouts, etc., etc. So once you get a big gap down like you get on Monday, what is the traditional, the feeling? A lot of people will either try to play the gap fill aggressively as soon as it opens and they get in trouble, or a lot of people will get fooled by the headlines thinking, oh, it's the end of the world, it's the end of the world, it's the end of the world. The best thing to do, and we talked about it, that's why I didn't do an update last Sunday, is wait for it to settle, wait for it to put in some kind of support, and then try to play that. What that means is after we've seen some kind of support come in, whether you want to get aggressively long on this 1 hour close and try and fade this for a scalp or for a gap fill, right? The point is, after such a big range, the only thing you can really do is you don't want to start to get aggressively short, you know, is you look for opportunities to get long. You know, you come in, you see this wick, you can draw some kind of support zone, you wait for price to come back into the support zone, you get a positive trigger on 1 hour, bam, you get long for the gap fill, right? Now, again, I traded this to the long side. Did I trade it all the way up here? No way, Jose, right? There's no way you could have expected this move. I'm sure somebody's going to tell you, yeah, I knew it was going to pop 300 pips, right? I'm going to be, as always, keep it as honest as possible, right? There's no way. I took about 20 pips out of this, right? I just scalped this for a move. Usually the gap fills I play that tend to be higher odds are the smaller ones, right? When you have a very wide gap fill, I'm very cautious. Usually I suspect that the traditional newer trader, when they see a smaller gap fill, they're less interested. And when they see a huge gap fill, they get super excited because gaps have to fill. The reality usually is that you have a lot more edge and you have a lot more chance of having a smaller gap fill fill quickly rather than try to play a huge gap fill. You know, the short gap fill would just be some kind of unhedging, some kind of market imbalance, and you can quickly get that filled. When you have very big gaps, usually it could be some kind of fundamental or structural change, and those may not come back. You know, some people say, oh, I just get long, no stop for the gap fill. It'll come back. It'll come back. You know, people love that. It'll come back. Now, let's look at something different just for a second. Can you tell me how that's going for you on Kiwi, on the gap? They'll come back, right? They usually come back. They come back until one day they don't and you blow your account. So again, keep in mind, it's always about percentage plays, not about trying to make a million. If any trade can substantially change your life for the good or the bad, you're trading far too big, okay? So basically here, again, I think nobody really expected this to rally this much. You know, I took about 20 pips out of it. You know, that's done and dusted. Then there's nothing you can do. If anything, you can try and fade it here. I did try to fade it in. I gave some back. I got stopped out on the fades, and then we put this in. So what happens then? You get the traditional newer trader comes in and says, well, hey, man, this is gap down huge. This has gone up 300 pips. Buy, 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 buy. They buy the breakup, right? What happens? Not so funky. What you have to understand, if you look at how the market moves, when you put in such a huge range in on the day, on any given day, whether it's a non-farm payroll day, whether it's an ECB day, when you get something so huge in terms of range so big, it means that the market has tested extremes. It means that the market has put in some extreme posts right? To the upside and to the downside. And usually what you'll tend to see after a day like that is you'll tend to see price stay inside that range, not aggressively move. Now, a lot of people are going to focus on the days you get bam, 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 huge moves 3 days in a row. But that's not really the reality, right? We always try to play for what happens 80% of the time, not what happens 20% of the time, okay? So if anything, once you get this range set, what is your edge? The best edge, as we discussed, is to try and fade this range. So when you come into the market the next day, you look for shorts for a move back down. You don't look to buy this. There's very little reason for this range to break, especially to the upside, unless there's something fundamentally out of the market, you know, and as we discuss pretty much every day live, there's no reason for that to do that, okay? So, and again, for those people who are saying it's easy after the fact, you know, it's not after, you know, we talk about this stuff live every single day. And, you know, and you can go on every single chart and look at this. Again, you know, it's the same thing if you're looking at the NASDAQ, you know. Once we gap down, we got that huge move. What, you know, Momo traders get in trouble. You know, students of price action understand that the edge is to try and fade that range, that most likely price will stay in range. So what happens is when price comes back into, let me do this way. When price comes back into those lows, your edge, asymmetric risk reward, is to try and get long. Whether it's a scalp, a swing, it doesn't matter. When price, so that's the Tuesday. When on the Wednesday, price comes back to the high, your edge is to fade, to get short. You don't want to try and get short into support or long into resistance. Your edge is the opposite. So if you look back at the charts, you'll see a gazillion examples of this, okay? So pretty much that's where we are, and we're holding pretty much in mid-range here. Slow market chop, not an awful edge in not an awful edge in euro here. Okay, so there we go. So 50 is getting a bit excited. So let me catch my breath again. I don't think I took a breath in about 30 minutes or whatever. So any comments, any questions on euro? Does that make sense? Can we start to look at another pair? How's it going, Luca? Good stuff. I appreciate all the guys who use their Twitter handle to log in, so at least I know who's in here. It's good to see some familiar faces, okay? So, okay. Yeah, and again, it's not really about reinventing the wheel. It's always the, oh, what did I do there? Did I just lose you guys? Are we back in action? Can somebody raise their hand if we're back up? Okay, we're good. Thanks. Okay, thanks, Colin. Okay, good stuff. Thanks, guys. Okay. Thanks. Okay. Okay. So yeah, you know, if you're trying to play continuation play on a breakout of the range, your biggest edge is to wait for a retest of that range after you've broken out of it, right? That's you know, that's the most interesting thing, right? And again, as I was saying, there's no you know, there's no voodoo, there's no magic holy grail, there's nothing specific. It's just looking at the basics, try to repeat the basics, right, day in, day out, no matter whether the market is interesting, no matter the market is boring, no matter if the market is moving quick, no matter if the market is moving slow. Everybody is going to do, let me use a technical term, a lot of people like to go through all kinds of mental masturbation, right? And the point is that usually if you just keep things simple and you keep your leverage down, there's not a lot that can happen to you. You know, you would be hard pressed to blow an account. Now, the difference is people get greedy, people struggle with psychology, people struggle with emotion, they get in trouble, and naturally they default to, it was Ben Bernanke's fault, it was my broker's fault, I didn't have the right indicator, I didn't have the right platform, I think this, I think that. Subconsciously or consciously, they find all kinds of justification, right? Just to avoid having to look at in the mirror and say, I'm an alcoholic. I traded too big. I was too stubborn. I didn't have any rules. I was shooting from the hip. But bottom line is, you can shoot from the hip and have no rules. If you trade one-to-one leverage, you'd be hard-pressed to blow an account. You'd have to try, and I think it'd still be very hard, right? So again, you know, it's all about understanding the context, understanding what's going on, and being real with yourself. And just, it takes time. It takes time. It just takes time, okay? So let's get cracking. Let's get rocking. Let's get a rolling. Let's look at another chart. What's going on cable? So everybody knows, no surprise, we were uber bullish on cable, right? But there comes a time on cable when you have to stand back, right? And what we said is, as long as we hold above, by the way, let's just get back into the price came back in. I'm not going to bother to put in the 100 and the 200 moving averages. You can put them up on the chart, but right? Pretty nice move back into support, confluence of 50 back, bam, 123 extension, pure move. Okay, we extend the fib to the new high, price comes back down again into support, 50 back, confluence of moving averages, bam, into highs. Very, very difficult to find more textbook long plays. Once we held here, and we talked about this even in a live session on YouTube, I believe, and in the as long as it holds above 58.10s, we stay long. We look for this to continue to the upside to go to the 123 extension. If this starts to trade, especially from a daily close below 58.10s, there is no point to try and be stubborn. Most likely, we're going to see a bigger retracement, especially if you keep in mind the context, and a move right back down into those 55.70s, right? So bam, very nice move. You know, that's exactly what we were looking for. And that's what the play. You know, yesterday there was an interesting plays to try and scalp this to the long side. You know, did this bounce in the middle of nowhere? Absolutely not. It bounced right at an interesting level. Now, I would not have had a buy order at that level, right? Because a buy order in that context at that level would have been with a 70, 80 pip stop. Absolutely no interest. And also we had this moving into the zone on the data. But you could easily wait for the shakeout through the data point, wait for this to settle, put in a positive close, and then get long, okay, for scalps or for the next move higher, whether that's even some kind of a retracement back up into this descending channel, you know, for a little pop. I did not trade cable. I just don't think there's an awful lot of edge in this chop. You know, the way we tend to trade is we like to look at high odds setups. We like to look at setups where we can trade with fairly tight stops. We like to look at setups where the market is responding aggressively to support and resistance. Now, if the market is dead, and if there's very little liquidity in the market, what does that mean? That does not mean that the key support and resistance zones will not hold. It doesn't mean that we will not ultimately see interest at those key support or resistance zones. But what it does mean is most likely those levels will hold, if they hold, in a sloppy manner. And what the sloppy manner means, to translate it into chart talk, is just a lot of wicks all over the place. And what that means is it becomes very difficult to trade that with a tight stop. So if you're trying to construct some charts to put them up on a blog and pretend you're a hedge fund manager for analysis after the fact, sure, it's great. If you're trying to trade that, you'll see that with the bid-ask widening, with the chop, you'll get a lot of stop outs. And even if you're right on your view, ultimately it's going to be fairly difficult to make money unless you're taking a lot more risk. So if you do want to trade, you'll probably have to drop your size considerably, widen out your stops, maybe widen out your targets. But I don't think there's an awful lot of edge. So I did not trade that to the long side, but that's what it looks like. So right here, what we'll have to see is, you know, as long as this technically, you know, if this were a normal market with normal volumes, as long as that holds, it looks like this is going to try and make a little run back up to the upside. And then we'll have to see if that gives us another shorting opportunity for a move back down. But again, there's not an awful lot of action in the market, so it's not that interesting. From the daily, you know, as long as we hold here, we could get a little bounce, but it's a bit tricky. You know, we'll have to see on what happens on Sunday with the referendum, and how the markets open. It's going to be, it'll be a bit tricky. We'll have to wait and see. Okay, so what I'm going to do is I'm going to try to get through a bunch of charts, then we'll pause, and I'll try and get, because there's a bunch of questions, and it looks like when I'm trying to look at all the questions and screen share at the same time, the system's having a bit of trouble, a bit of overload. So what I'll do is I'll get through some charts, then I'll pause it, and I'll pause the screen share so I can look at the questions, make note of the questions, then we'll go through those. Okay, so what else is going on? What else is going on? What else is going on? Now, another interesting one is EJ, right? So what's happening here is we had that huge, this is an example of a trade where, I tried to play a similar kind of trade on Euro and on EJ when they filled that gap. And Euro, I tried to be a bit too smart about it, and I traded with a tighter stop. I got taken out, even though it did go back down. Right on EJ, I traded it wider, and that played out quite well. But right here, you see it's the same thing. We're stuck inside this action post that gap. So keep in mind that as long as we stay inside that level, it's just much to do about nothing. As we like to say, there's just a lot of wheeling and dealing inside that range. So the edge is likely to try and play those extremes, but keep in mind there's very low volume, very low chop, so it's tricky to play tight. So we'll have to see how we trade around those areas. And again, this is pretty much going to be down to the vote, right? We'll have to see what happens. If we get a no vote, most likely there's no reason why these shouldn't gap down and try to test those lows we put in, right? If we get a yes vote, it might gap up a little bit, but I'm not sure the situation's really solved. So I think the yes vote at least will have, if we get it, probably more of a knee-jerk reaction on the equity side rather than the forex side. We'll have to wait and see. It's just a bit of a tricky call, right? Another interesting one is CAD, right? What's going on CAD? CAD, we're just stuck here. Now, CAD, you can make a pretty good case for the long side, and you can make a pretty good case for the short side. What we've been discussing is that in this whole area, it's extremely choppy, and there's not an awful lot of edge, maybe just trying to scalp something here and there. But really, with what's going on in terms of USD flows, with what's going on in Greece, mixed to what's going on crude, it's just a really tricky one. What we put out this chart saying basically we expected that 2350 to be pivotal inside range, hold above. We expected it to go back into the 2530s, right, and down back into those lows. So this was the range we were looking at this pivotal level. So we managed to break up to the upside, and here it looks like this would have been a beautiful short on the daily if we'd closed back inside that range. That would have been a failure to the upside of the range, so you probably would have seen a lot of more downside action. But there has been an opportunity to play this to the downside. I've no real surprise people following for a while. I tend to have more of a bearish stance on this, just more of a contrarian stance on this, and we did have some opportunities to try and trade this to the downside. If you look at this here, we're on an hourly chart, right, and we start to have some opportunities, in late U.S. session the other day, then in early London, which clearly I tried to scalp this to the downside, trying to build some kind of a short. Clearly this did not work. Then we had another new reversal at highs, little chance to take it to the short side here, just trying to scalp it. For me, this trade here was just a scalp all the way back down into these lows. And the ways I was looking at this scalp is I was looking for a move back into the lows, and then I was going to let the daily decide for me. So what that means is I took pretty much everything off into those lows, and then what I said is, and we talked about this yesterday, if the daily ends up closing back below the 2510s, I'll be very aggressive in holding, right? If it doesn't, I'll take some more off, but it's still looking good. It's not looking as good as it could have, but it's still looking good. Usually, again, even with these daily plays, it's tricky because you've just got so little flow going through, so little continuation. It's tricky for them to get some Momo, and then it means also holding through the weekend. So again, I would be very cautious if anybody's trying to hold a leverage position through the weekend, because it's just, it's likely going to be extremely tricky, right? Gold, another time showing, reminding traders that trying to trade breakouts on gold is really not a super high odds play. It looks like FX Pros just dumped on us. Anyways, we can get another platform up. It's not like the market's moving. Let's see what happens here. But, it's not like, you have very little edge. If anything, you want to wait for these kind of fake out trades, for these kind of dojis on gold to trade at the opposite side. As you guys know, and as I've repeated and talked about countless times, even though the internet is probably full of people who claim to be intraday gold, crude, silver scalpers, the reality is that in terms of profitable traders doing that, that's probably a very rare breed, if not extinct breed. It's extremely difficult. The leverage is very high. There's not an awful lot of edge and extremely whippy. I tend to favor these kind of plays for unleveraged play, for swing plays, rather than trying to get funky and trying to get smart trading this intraday. For all of those who have tried, you'll probably agree with me, right? So right here, we're still stuck inside this broader range, 1250, 1200, 1150. A massive shout out to Miss Gold, by the way. And we'll have to see how this trades. A lot will depend on Greece still, but we're still stuck. So I still think I tend to go with some kind of a basing process here, but we're still stuck. I don't think there's an awful lot of edge here or anything new really happening, okay? Now, what else have we got? Does anybody have anything they desperately want to look at in terms of charts? Yeah, I mean, something interesting here is we've got this Aussie starting to shape up. Well, starting to shape up. It's been shaping up. It's just, they just keep on getting killed, right? Debbie, they just keep on getting killed. It's a tough one. It looks like it's holding a bit more of a bid than Kiwi. Now the issue is here is just that, we're talking about even more rate cuts, God knows what, so broadly speaking, it's still trying to hold this support, right? If you're looking at it from a monthly, this is a massive level. This is a key level, and you see that it's just kind of stuck here looking for direction, waiting for the next big move. Maybe we'll have to get through this grease, depending also on what gold does, right? And you see it's just basing here. It's just having some trouble. So the way I'm really looking at this is that this is a key zone, right? Key zone going into the end of the week, going into the weekend. Now keep in mind that if you're looking at further to the downside, so that low is 75.30. So again, we haven't been here for a long time, so I think it's almost mandatory to put the round number on there, really, just for fun, or just because we haven't been there for such a long time. So if we go back on the weekly or on the monthly, you see that this RAM number hasn't been tested since like 209. So it's probably a key number, a key focus. And in this slow market, you can bet your bottom dollar there's a lot of stops layered around there. So it's probably very tempting for the market in the slow and dead chop to try and take that out. Okay, so that's some key thing to look at. So the problem is it worth trying to fade this with a stop below that number because you expect this to catch a bid, because you expect this to be defended? Well, if it was a market that was moving with a lot more fluidity, with a lot more liquidity, then it would make a lot more sense. In a slow market, there's going to be likely going to be less interest or less and less gunpowder to defend that, or other people trying to play around that. So I would be a bit cautious. But in terms of outlook, right, as long as the 75 holds, as long as the 75 hold from a closing basis, so let's try and be not conservative, but let's try and be a bit smart about this. Today is a bit of a whippy day, low chop. What's going to be important is the Momo on Monday. So let's talk at it, TMJ. Let's talk about it from a Monday perspective. If This can get through the end of Monday with a close above that 75. You know, the odds for some kind of a bounce are pretty good. If this closes Monday below that 75, likely this is going to be trade very, very heavy. Now, yeah, I mean, we got services PMI out of the UK later on. We'll have to wait and see. But, you know, so really we'll have to, that 7500 is a key and important number. Keep in mind that next week we also have, just in case anybody forgot, we've got that rate statement out of the RBA. So it's going to be funky, and we've known that all these, we've seen a lot of funky action around all these rate decisions, so it'll clearly be interesting to see. But you know, as long as the pressure is on, pressure will stay on. But don't be surprised to see some kind of a knee-jerk reaction or some kind of profit taking ahead or into that RBA statement. So again, there'll be a lot of wheeling and dealing into next week. So clearly, this is one of my favorite charts, or one of my most interesting, not favorite charts, that's silly, sorry, that's silly. It's not favorite chart, but this is clearly one of the charts I am most focused on for the next couple of days, keeping in mind the Monday open and keeping in mind the RBA statement on Tuesday for possible plays. I think there's likely going to be some opportunity, some interesting opportunity to engage here. Does that make sense? And in terms of crude, what's happening on crude, you know, we're kind of hovering here. We talked about this yesterday actually with Colin. You know, a lot of people trying to get long, trying to scalp this. What we said is this kind of market, there's very little edge trying to scalp this to the long side. Hey Colin, how's it going? Remember what we said is even there's so much support down here that people are going to be tempted to try and get long. But what is the reality? The reality is that we're in a kind of dead chop market, and it's just too easy to clip all these weak hands to the long side, and you see market keeps on breaking lower. There's very little edge in trying to do anything. The way I look at this, and again, guys who've been following the blog know, is that we're swing longs here. We tend to believe we've put in some kind of a swing low for the year. We're looking for a move back into the 70, 80s potentially, and I think right here in terms of short-term action, as long as we don't start to trade back below these 5400, you know, it should be okay. But very, very whippy. I don't know if you have a specific question on crude, but I don't think there's an awful lot of edge there. Okay, so guys, my voice is starting to break up a bit. So what I suggest is I'm going to stop the recording here, and I'll post it back up here if anybody's. I'll upload all these to YouTube later on today, not now, but I'll post it. I'll post a link to the Adobe recording in the room. So if anybody gets into the room now, you can listen to what we said at the beginning. I'm gonna have something warm to drink, rest my voice, go through the questions, and then I'll be back up in a bit. You know, maybe in a half an hour or so after the UK data release, so we can talk through the market or what's happened after the data release and see what's going on there. Okay. Good stuff, guys. Let's see what happens. Thanks so far.